Okay, everybody, here we go. It's me, Gregory Mannarino, Friday, July 7th, 2023. Let's start off with the economic news from this morning. I'm laughing here. Let's go back to April. So, the non-farms payrolls number from April, if you recall, came back at this fantastic number. No one could believe how great it was. Oh yeah, and the market was all giddy off of that, I guess. But apparently that number was wrong. Yes, it was wrong. How do we know it was wrong? Because it was revised way, way lower. Imagine my shock. You mean the data is inaccurate? Oh, wow. I would have never imagined that. How about you? Can I see your shocked face, please? Oh, no. Yeah. Now, today, we got another one of these non-farm payroll numbers here, and it came in actually worse than expected. And, of course, that will be revised lower as well. Look, you and I, we understand. First of all, the data is fake. It's inaccurate, and they revise it every way they want to after the fact. No one pays attention to it after the fact, like this April number here. But anyway, that's part of the situation here that's going on. Now, here's something else that's very, very interesting. A couple of things. Mortgage demand continues to literally disappear. And again, what is this all about? Again, the consumer getting crushed, the lack of available credit here to small businesses, to the consumer itself, fulfilling the corporate agenda. But it gets bigger than that. Now, with regard to the consumer, what do we know? We know that consumers are holding their largest debt loads ever: consumer debt, household debt, personal debt, credit card debt. More so than ever. You got loan defaults more so than ever here. But this is an interesting little factoid here. So pawn shops are seeing record inflows of goods. In other words, people are selling whatever they possibly can, probably getting nothing for it, to these pawn shops here. And I think that's so sad. I really, really do. So, I mean, this just goes to show you how badly off people are. But, some people are telling us how great we're doing and our economy is fantastic and inflation is even coming down. Well, that's a complete lie too. Oh, yes. So, a couple of other things I want to talk about before we look over here at the market. You and I mean this, almost a year ago now, before everybody else, started to sketch out how the banks were in trouble. No deposits, no loans, no deals. And I've been covering this a lot lately, and I think this is going to develop into something much, much bigger here. We understand what happened with these regional banks here. They're in all kinds of trouble. Their assets are being sold off, being absorbed by the larger banks. What are they doing? They're consolidating the system. Fewer players here. Okay, lovely. But the big banks, this is another very interesting little factoid here. The large banks are seeing record outflows of deposits. People are pulling their cash out of these institutions, and this is going on for several reasons. Actually, it's almost $1 trillion of outflows. People pulling their cash out of these institutions for whatever reason. Just hold that thought real quick. Since April of last year. Now, look, we have discussed right here for I don't know how freaking long. People can't save any money. All right, they're having a very difficult time making ends meet. They continue to borrow at the same time. You're creating a very, very bad and desperate situation for themselves. Henceforth, why we're seeing pawn shops are seeing record inflows of goods. And like I said, this bothers me. It really, really does. Okay, whatever. But this presents another problem here for the major banks. This is the large banks that are seeing record outflows of capital from deposits. First of all, like I said, people can't save anything anymore. The savings rate is in the negative. People are unfortunately having no choice but to pull their cash out of these institutions to make ends meet, and at the same time, again, borrowing. And what are they doing? People are assuring themselves a front row seat on the train to destitution, and they're being pushed to the lower rung of society. This is deliberate. This is something you and I have known would happen for, I don't know, 10 years? Have we been speaking about this here? And it's this mechanism, all right? It's deliberate. It will continue to get worse for people. Honestly, what are we going back to? What have we spoken about, you and I, for a decade now? A new definition of a feudal system, a whole new set of rules, a new paradigm. You and I are clearly aware on that, keenly aware of that. We've been speaking about it for years. But, I mean, look, they, meaning, the so-called authority figures, so-called presidents of the United States, Federal Reserve presidents and chair people and, Treasury secretaries and the propaganda ministry can tell you how great you're doing, okay? Because they get to dictate your life because they're the authority figures. But you see, it's amazing to me how they try, and probably successfully to some people, to convince them that what they're seeing and what they're feeling is not real. Imagine that. It's just so crazy to me, honestly is. Anyway, looking over here at the market, the 10-year yield has dropped slightly from yesterday. We'll see where that goes. The US dollar on a relative strength basis has also come down. The MMRI still over 250 has also come down slightly from yesterday. So we'll see where this all plays out. Stock futures right now are relatively flat. Nothing major going on here. You got Dow futures slightly in the red, S&P futures slightly in the red, NASDAQ futures slightly in the green right now. And that's kind of where we stand with that. Cryptocurrencies under some pressure this morning. Gold and silver catching a bid, crude oil catching a bid as well. With regard to commodities, people, you know what my take is on this. You need exposure to these things. The best way to do it, hold this in your hand. Real thing. Silver, my favorite asset of all time. I will never waver from that. One of my best friends, Jimmy LaRocca, I keep talking about you lately. This guy is a stacker of the highest order. He's probably watching this right now and he's laughing. I know he is. But yeah, he's got the right idea. Gold as well. Silver number one. Gain yourself some exposure to commodities across the board. I have put out several newsletters, my free newsletter, link in the description of this video, to a bunch of exchange-traded funds, some of which pay dividends to allow you to gain exposure to commodities. So be sure to check my newsletter, people. Again, link in the description of this video. Look through some of the past things I have put out, and you'll get a handle on what I'm talking about. It's just so important here. You need to be understanding the current situation here and then taking action. Again, you and I could sit here and blab and blab and blab about what's going on, about the fake data, revised data, none of it's real. And on top of that, I mean, it's incredible what they do. Again, they float out these big numbers like in April, and then all of a sudden it gets revised way lower. How are we supposed to trust, and do you trust any of this stuff? I don't think you do. But that's just the way it goes. But anyway, going back to what I was saying here, stock market right now, the level of risk is extreme. According to the Mannarino Market Risk Indicator, again, free to you, free to everybody, link in the description of this video. I mean, that was one of the top 5 reasons that Goldman Sachs put out yesterday as to why Goldman believes, that this market is going to fall. I mean, look, it's definitely going to fall at one particular point. I mean, like beyond anyone's wildest dreams. The big crash, though, is not going to begin nor end in the stock market. It's going to begin and end in the debt market. Now, this sell-off in global bonds right now, if they don't get a handle on it, and I mean soon, this could really unfold to be the big one. But we'll see what they're going to pull off here, people. Again, this is an election cycle, a presidential election cycle. It would be exceedingly rare. In fact, it would be almost unheard of to have a stock market crash during a presidential election cycle. Generally, and I'm urging you to do your own homework on this, when you have a presidential election cycle, the Fed manages to prop up the market. You understand? That's a fact. It's the way this thing runs here. So, I mean, it would be unprecedented if this were to happen. So, I mean, look, I'm not saying this is going to happen with regard to, are we going to start to see, for example, some mysterious entity get in here and start buying all the debt again? What is the goal of a central bank again? Tell me again, what is the goal of every single central bank? And what are they trying to work towards right now? They want to own it all. They're buying it all with their own product. Imagine having that kind of power. Being a central bank, especially here in the United States, the Fed has no oversight at all, zero. They can take their product, make as much of it as they want, and buy anything they want to. Again, with no oversight at all. And all of that debt gets put on your back. I mean, just think about this. In the last month, the national debt has increased $1 trillion. But you don't hear this stuff. Again, this is stuff that they keep off of the mainstream propaganda ministries. You can't know about this stuff. They want you looking in a completely different direction. And then, of course, as they propagandize you. And, yesterday I was talking about the U.S., our largest export product is inflation to the rest of the world. And this probably number 2 is propaganda. It's unbelievable what has happened here. All right, people, so that's the story, and I want to hear from you on some of these things. What do you think about this? And I hope this isn't you, that pawn shops are seeing their largest inflow of goods ever. That's pretty sad. The large banks are in a lot of trouble here. I'm telling you, record outflows of capital. That is, again, we're going to see more consolidation of the system, more failures. And I've said this before, I believe we're going to see some consolidation of the bigger institutions as well. Again, they need fewer players to gain more control, because that's what this is all about. And, like I said, I want to hear from you. Am I way out there? You don't see the things that I see that I'm talking about right here? It's kind of right in our face, I would have to say. But again, please comment. Please share the video. Those thumbs up are exceedingly valuable. Please do that. And I promise, I'll see all of you later, 1:05 p.m. Pacific Standard Time, Pacific Daylight Time. People get angry when I say Standard Time. I don't know why, but okay, whatever. And have some questions ready for me, all right? I want to interact with all of you. I want to talk to you. And, we got this down, all right? Love you a lot. See you later.